Anything for the sports channel, Gary.
Alrighty, well, we had a crazy Monday today in the market. It was super active in the live stream today at Weenie Trades Live. Tons of stocks were popping off on vaccine news, election news, things like that. So the Dow is up massively due to the vaccine. So we'll see how that goes in the future. But we had an okay day trading. Our first trade of the day was on DraftKings. And DraftKings, we saw that we were nice and oversold. And if we have vaccine news or potential vaccine news, whatever it may be, DraftKings should benefit. So the fact that we're getting a flush off the open, I want to see if I can get a dip buy going. So we went ahead and dip bought DraftKings right at about the 42 level as we were super oversold. And then as we started to curl up, I went ahead and added to DraftKings over 42.20. And then we got this nice good push up, and I went ahead and took off half my profits right at about 42.57. My ultimate target was about 43 with my stop at about 41.50. And this wick right here hit 43 to the penny, but I didn't have my order set to take profit. I figured since I took a partial at 42.57, we could push and get a little bit farther than 43 on DraftKings. But essentially we went in DraftKings right here at 42. Added at 42.20, stop is 41.50, took profits off at 42.57, and we got this nice good push up, and then we started consolidating. And so once we started consolidating, I went ahead and put in my stop right at about 42.69, and this red candle right here went ahead and tagged me out, and DraftKings was a good revenue trade of plus $45 on the day. Our next and most annoying trade of the day was plug power. And we had the right idea and the right trade, but just wrong timing. So plug had this nice good pull down, nice good push up. The volume was really good due to earnings. Then we had this pull down into the old all-time high, and especially that $20 a share level. That's going to be psychological. Then we put in a hammer candle and started showing a green candle. I went ahead and got one contract, so I'm long and plug at 20.22. Got a nice push down right into 20. Got a nice push up. I even added at 20.2. So I have two contracts. Then we started to push up, and then I added again. But this time it was a false breakout. We broke it by just about a penny, and then we flushed massively. And my stop was 19.74. And unfortunately, they got the low wick right on me. Low of this candle was 19.73, so wicked me out. And so that was for a stop out on the first trade of minus $50. Minus $50. We were in with very heavy size, looking for the break upward, and plug just tagged me out. Super annoying. But then we started consolidating a little bit, and I was like, okay, I'll give plug another chance. So we went ahead and added to plug right over 20.08. Then we got this nice good push up, pull back, push up, extended through the high of the day. And then this wick right here tagged me out. So plug minus 50 on the first few contracts, but on the second contract, we made $16 and $13. Net minus $15 on plug power today. The reason this is so annoying is because plug really extended through the high of the day, consolidated, and went as high as 21.89. Had I just had a 1 or 2 penny extra of a stop loss, instead of minus 15, this would be about a plus $200 to $300 trade. Not saying I would have nailed the high, but I definitely would have been peeling off profits in the 21.50 area, the 21 area, and that would have been changed the entire day of day trading today. Our last day trade of the day was on Workhorse, and Workhorse had this great pattern. We had a quick flush off the morning, and then we had this nice tight consolidation on low volume, as you can see right here, and then we started to break out on high volume. Notice how the volume was nice and low, then the participation starts increasing as we're coming out of the triangle pattern. So nice tight triangle pattern. I went ahead and got long on Workhorse at 17.33 with a stop as a 5-minute close just beneath 17. And so risking $10 to make $20, we got this nice good extended push up. I took my $20, but that was not the move. This is one where I should have really trailed off my stop at each pivot. So I really should have just had my stop at 17.79, trailed up my stop to 17.93, trailed up my stop to 18, trailed up my stop to 18.21. Had I done that, it would have been quite a while before I was tagged out. And instead of taking a $20 profit, we could have taken a $250 profit because Workhorse went as high as $20 a share. So from entry to our exit of plus $20, we caught 3.7%. But had we just held and trailed our stop a bit loosely, targeting that 20 level, that's 15%. Workhorse, nice good revenue trade of plus $21. So net plus $51 on the day trading today. Nothing too crazy. Keep an eye out for the SPY. The SPY is a bit overextended, but overbought can stay overbought. Momentum is really starting to curl up. I'm going to be looking for a gap fill. Otherwise, if we can hold and come out of the old all-time high, which is give or take 360 on the SPY, 358, 357. The old all-time high is 357.72. So if we can hold above that, it's go time for the market. We'll see if we can really start punching up. Otherwise, more consolidation is definitely likely. Just last Friday, just a week ago, we were all the way down at 322.50. The market has rallied 13% in 1 week. That is massive, and so there is likely going to be some profit taking in the market, but be careful. Alrighty, be sure to tune in to Weenie Trades Live and come and say hi. Alrighty, thanks for tuning in. See ya.